so sorry about that. My intern, she just keeps trying to get it. What are you doing? Last week, we found out that Warren Buffett's company, Berkshire Hathaway, sold its entire $1.3 billion stake in Costco Wholesale Corporation, a business that both Warren Buffett and Charlie Munger have praised consistently over the past couple of decades. And while this investment only represented 0.7% of Berkshire Hathaway's stock portfolio, there is still a lot we can learn by looking into Costco as a business, as well as investigating this transaction specifically for reasons why Berkshire Hathaway may have sold out of that position. If you've been enjoying these videos where I cover the trades and portfolios of successful investors and big institutional funds that I've been doing over the past week or so, then make sure you hit subscribe and hit that notification bell so you get notified when new videos are coming out, because over the next couple of weeks, there are so many other companies and big successful investors that I need to talk about and the different businesses that they've invested in and sold over the past quarter through these 13F filings. So there's a ton of content in relation to that coming out over the next couple of weeks. So make sure you're subscribed so you don't miss out. Before we start to look at some of the reasons why Berkshire Hathaway may have sold out of Costco, I think it's important to understand when this investment was initiated, what's the origin of this investment, and also to take a look at Costco as a company specifically to see how it lines up in terms of following Warren Buffett's core principles. Warren Buffett invested in Costco through Berkshire Hathaway for the first time in the year 2000, right after the dot-com bubble and the subsequent recession, which ended up pushing the stock down about 35%. According to a 2002 SEC filing, which was the oldest record of investment I could find, Berkshire held 5.6 million shares with a value of $182 million. And at the time, this Costco investment was really no surprise to anybody. In terms of the timing, it was during a recession, which is when Warren Buffett and Berkshire Hathaway typically like to load up the truck and invest in a lot of great businesses while they're suffering in the short term from the recession. But it's also no surprise that they invested in Costco because Charlie Munger, Warren Buffett's business partner, has been on the board of directors of Costco since 1997 and has also had a significant stake in the business personally. So he has personal wealth invested in the business, so it made complete sense to see Berkshire Hathaway also open a position in the company. And it's also no surprise that both Warren Buffett and Charlie Munger love this business because it meets many of the requirements that the two investors have been talking about over the past few decades in terms of principles and philosophies to follow when trying to identify really sound long-term investments. So in this video, I just wanted to spend some time going through my own analysis of the business and showing you some of the patterns between Costco's business and the principles that Warren Buffett has been talking about over many years. So the first principle that Warren Buffett talks about is investing within your circle of competence, which basically means that you want to only invest in businesses that you can deeply understand, that you can have complete clarity on how that business functions within that business specifically, but also within the industry and the environment in which it operates, which for most people, for the average person, myself included, I think it makes sense to focus on businesses that have relatively simple business models compared to investing in highly complex businesses like pharmaceutical companies or a financial institution that has 20 different divisions, for example. And Costco's business does fit within what I would consider a relatively simple business model, right? They have physical wholesale locations and they are really just at its core a wholesale retailer. Costco operates a two-step retail business, which skips out on the final step of the chain, which is your typical retail store. Products are instead shipped directly to warehouses, and customers are essentially shopping in the warehouses and buying in bulk, which makes it one less step in the chain, in the operations, than a typical retailer. Customers require a yearly membership to access these warehouses. Products are sold at low cost and in high quantities. Their product lines are short, so they have a limited variation of certain products in terms of colors, and that allows them to reduce unsold inventory and increase the speed of inventory turnover, which both contribute to reducing costs. And these warehouses are primarily located in the US and Canada, but the company has had success expanding internationally, particularly in China. So for Costco's business, there are really a small number of factors that we can look to that will influence the business in the future and that can allow us to come up with some projections of where this business will go in the future. So we're talking about things such as the price that people are paying for their membership, how many members they have signed up, what are the sales like in each of their warehouses, how many warehouses are they able to build and expand internationally. Those are some of the few factors that will significantly influence cash flows in the future, and that compared to another kind of business is a lot smaller and easier to wrap your head around, which means it's a lot more approachable for the average person. The second key Warren Buffett principle is to look for businesses that have a distinct competitive advantage, businesses that have something unique, something that other businesses don't have, and that customers need to go to that place in order to access that particular product or that particular service. And Costco certainly has one of these advantages. And while I'm sure that many of you could list all of these different little advantages that Costco has and things that they do that gives them an advantage over other retailers and other grocers, overall, as an umbrella statement, I think we could categorize all of them into the advantage that is that they are a low-cost business operation. As I mentioned, they are a two-step retailer, which avoids the cost of shipping products from warehouses to retail locations. They also sell products in bulk, which means they have fast turnover, which helps them to reduce costs. They have short product lines, which means they have less inventory loss, which again reduces costs. And the price of their products are close to their operating costs, which means that the business basically makes no money on the products, but 100% profit on membership fees, which have grown consistently over time. And then I think the best indicator of a successful business that runs on a renewal subscription basis is how many people are staying on to that subscription after 1 year. So a lot of people will buy a Costco subscription and then they'll use it for a year. And then how many of those people are staying on for the next year? And at the moment, that renewal rate is about 90%, which means that for every 10 people that sign up to Costco, 9 of them are staying on for the next year. And that is a really good indication that the majority of their customers are satisfied with the experience and the cost of the products available at Costco. The next important factor is management, right? We need to look at the people who are running the business and first of all, make sure that we trust them, that their values are aligned with ours. And then we need to look at their skill at investing within the business and managing debt to a low level. So focusing in on that first section, let's see if we think that management's values are aligned with ours. So for example, taking a look at the current CEO succeeded the founders. So he was probably working alongside the founders before he went out on his own and has been running the company, which is certainly a good thing. And the current CEO has been a director at the company since 1984 and CEO since 2012. So he's been at the company and at the top of the company for a very, very long time. He also owns 300,000 shares worth over $120 million. So the fact that he's been at the company while the founders were there, he's been at the company a very long time, and he's also been the CEO for almost 10 years. And on top of all of that, he owns a significant amount of his personal wealth invested in the company. All of those things combined mean that his values are very likely going to be aligned with someone who wants to be a long-term shareholder, and that is certainly something I like to see. In terms of management's ability to invest effectively, to manage money within the business, they have a terrific return on invested capital, which is very, very high and has been growing over time. And management has a habit of distributing cash when they cannot reinvest it, which is exactly what you want from a management team. The only thing worse than a management team that cannot invest within the business is a management team that can't invest within the business, but then retains the capital so that you personally can't go out and find a new investment. That's quite the opposite of what Costco's management does. They generate significant returns on what they do reinvest, and what they don't reinvest, they don't just let it sit around there as cash. They distributed it out to the shareholders so that shareholders can then go and find a better investment opportunity for that money. And then in terms of debt, their debt also isn't overly high. They do have some debt and they do utilize short-term credit in order to save money on their inventory. So they can get supplier discounts if they're using credit in order to pay their suppliers up upfront faster before the inventory has been sold down. So you sort of utilize some debt in order to reduce some of their operating costs, but overall their debt position is fair. It's not amazing. They don't have zero debt, but it's also not outrageous, this huge pile of debt that is going to get out of control. So from a long-term perspective, the business really does look like one that meets Warren Buffett's criteria. And as a result, it has me wondering what has changed in the business, if anything. Has something changed in the business over the past couple of years that means it is no longer a business that Warren Buffett would want to hold on to? The reason why Warren Buffett has sold out of his stake. And more interestingly, why is it that if it's such a great business that Warren Buffett and Berkshire Hathaway haven't loaded up on this business over the past couple of decades? They invested a little bit in 2000, but why haven't they increased that position to be a huge part of their business if it is such a great investment? So I spent all of this morning looking through articles, reading Costco's annual reports and their press releases, and looking at analyst reports and all of these different things to try and find something negative that has been happening with their business in recent times that could be the reason why its business is changing in the future compared to how it's performed in the past. But I honestly couldn't find anything significant that is changing in the business that would be a negative and cause someone to want to sell out of that business. The only changes that have happened to the business recently have all been very, very positive. They're expanding internationally successfully. They recently opened their first store in China and they had 139,000 signups on the first day, I think. So these are people paying about $100 per year or $70 per year or something like that in order to have a membership. Their profit margins are increasing. Their online sales are up. Their sales at their existing stores are up. And they're continuing to expand into China and into other countries as well. The only negative that I can really see is Amazon and their competitive force in the industry. Although I don't see Costco and Amazon as direct competitors. I see people buying things on Amazon, buying a one thing every now and then, buying them quickly and typically not in bulk, right? Typically just buying what you need and getting it shipped to your house really quickly. Whereas when you're going to Costco, you're buying in bulk. You're buying other things such as groceries that you can't get on Amazon. I don't kind of see them as competing against each other directly. However, of course, Amazon would be something to consider if you're investing in Costco. It is a huge business and there's no reason why they wouldn't be able to go on and compete directly against Costco at some point in the future. But regardless of all of that, I think there's only one thing left that could possibly be the reason why Warren Buffett and Berkshire Hathaway are selling out of Costco, and that could be the price that you have to pay to make an investment in Costco. And in my personal opinion, Costco's stock price has gotten way too high. And when I say that a business's stock price has gone too high, what I'm talking about is whenever I'm evaluating a business, whenever I'm analyzing a business, I'm making an estimation about what the future cash flows of that business will likely be, and then compare it to the price, because that's ultimately all we care about as an investor is what am I paying for this investment and what is it going to deliver back to me over the next 10 or so years. So what I do is I come up with a projection of what I think the future cash flows of Costco will be, and then compare it to the current stock price. And when you make that comparison, at least under my analysis, the stock's price is very, very high. If we assume 5 to 15% yearly growth and we target a 15% yearly return, then we would want to buy the stock at somewhere between $95 and $175 per share. And that is far lower than the current stock price, which is about $380 per share. And even if we were to buy it between 95 and 175, we're not even allowing for a margin of safety for errors, which means if the business underperforms our expectations and we buy within that range, we won't even make a 15% return. So basically, the stock is very, very expensive, which means that if you were to buy the stock today at $380 per share, one of two things is going to happen. Either A, the stock is going to massively outperform my expectations of 5 to 15% per year growth, and you will make a great return, or the business will have growth between 5 and 15%, or maybe even lower, and the return is likely going to be single digits over the next 10 years. So why is it that the stock is so expensive? I mean, I don't think it's really that hard to analyze why the business is so expensive. As we spoke about, they've been doing extremely well over the past 2 decades, let alone in the past couple of years where things have really started to ramp up. They're just about to start expanding internationally into China, where there is a ton of demand, at least at that first store, and it's likely that that will be replicated over a number of different stores. And the investment has been praised by Warren Buffett and Charlie Munger for the past 2 decades, which means that a lot of people are just attracted to buying the shares that those great investors hold. But ultimately, we really won't know what the actual reason is behind the sale of Costco until we get an interview or a statement from either Charlie Munger or Warren Buffett. So we'll kind of just have to wait for that. And while I can speculate that it may be because the business is really expensive, I don't know if that's the case. And typically, Warren Buffett is less concerned about the price as long as the business is really great. That's kind of been his philosophy over the past couple of decades, to invest in really great businesses and hold them even if they get really expensive. So it may even be unlikely that the stock price is the reason why they're selling out of this business. But ultimately, we don't know. I'd love to hear your thoughts on what you think about this sale from Warren Buffett and Berkshire Hathaway down in the comment section below. And as I mentioned, if you want to stay up to date with all of the future videos coming out, then make sure you're subscribed and hit that notification bell icon next to the subscription button. Turn on all notifications, and that way you will be notified on your phone or laptop when a new video is coming out. But other than that, I hope you guys enjoyed today's video, and I hope you guys have a great day, and I'll see you in the next video.